Hi, I'm Alun Thorne, Head of Business on the Birmingham Post, and we are here today at Fort Dunlop, the home of BPM Media, to talk about access to finance. It's almost 2 years ago since the beginning of the credit crunch, which has led to one of the worst recessions in living memory. The credit crunch has had a catastrophic effect on local businesses who have been struggling to access finance. This is companies from small SMEs all the way up to organisations such as Jaguar Land Rover. Today we have invited 5 key players from the finance sector to come and talk about the situation today, are things improving, and what small businesses and larger businesses need to do to access finance. Joining us today at this roundtable discussion are Steve Walker from the Aston Reinvestment Trust, Denise Craig from the Federation of Small Business, Ben Bolt, who is from venture capitalist Catapult, Simon Peacock from Lloyds TSB Commercial, and Patrick Palmer from Advantage West Midlands.
I'm pleasantly surprised at the volume of very good quality businesses we're being introduced to at the moment. Our sources have changed significantly over the last 12 months. We're now getting far more businesses coming to us directly. We're getting far more businesses coming out of the venture capitalist market. And there's very little coming out of the corporate finance market while it's in a bit of a lull. The common theme we have at the moment is that we've got plenty of money available. We are willing to back good management teams, we're willing to back good business plans, and willing to back good forecasting models.
Over the last couple of years, it's been a buoyant time for venture capital broadly. There's been lots of money that's been invested from both public and private sources in creating funds to invest in SME businesses, small, medium-sized enterprises that are growing. Clearly over the last year there's been a number of changes, particularly in the banking market, and I think businesses' access to banking funds have decreased and become more challenging. Historically we may have seen businesses that were well over 60-70% funded by debt, with the balance coming from equity. I think going forward in the new world, I think banks are going to be less keen to lend those sorts of multiples of profits and cash flow. And as a consequence, from our perspective, we see the market for venture capital growing.
It has been very difficult. Some sectors have been really badly hit, and they're the usual suspects, unfortunately. Automotive, construction, anybody connected to manufacturing by and large has found it really tough. And retail was already suffering long before this hit the headlines. For those businesses that are imaginative and are prepared to use the small business flexibility, that know their customers well and understand their markets well, then the future is less bleak for them, and they stand a really good chance of being still with us at the end of August. There are opportunities out there for those that need it.